This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. It's a Thursday morning, and it's a better morning as compared to the mornings we've been having all of the last 3 or 4 days. We're waking up to better global cues. I'm Prashant, with me, my colleague Sonia and Nigel. Guys, hi, good morning.
Good morning.
Hi, good morning, and we officially have the World Cup, kicking off today, right? There's so much. The energy is really good. I think India plays on Sunday.
Yeah, India plays on Sunday. Yes.
The
I think all the India games are on Sundays, right?
That's all the big boys there, the ICC World Cup, and since it's happening in India, we all know that the hype is real this time, right?
Yeah, absolutely. Hope to get to see one of the games, Sonia, but it'll have to be only in Mumbai because can't go out of Mumbai, right?
On television, guys. I mean,
At home.
By the way, talking about sports in the World Cup, the Asian Games, right? Outstanding performance, and I think 18 goals in total. I was reading, so it's just incredible. I mean, of course, yesterday Neeraj Chopra, the relay team. And I think it's just been a fantastic haul. I think the best ever. The last one was 16 goals, and that was in Jakarta. This is 18 goals in total, 81 medals. And I think today is also, although there are not that many medal events, but there is squash, there is, I think, badminton, and a couple of others as well. So it's been pretty good going.
India everywhere.
Yeah.
Preferred market, doing well in sporting action, and now the World Cup as well, hosting the World Cup. So feeling good about it. About this
power, right?
Yeah.
In every possible way.
Absolutely.
But what about the market? I mean, there's a little bit of a recovery that we've seen flow through, but still markets have been a bit tentative.
At least the start is going to be a little better, and then we'll have to pick it up from there. So, let's just actually begin there. We've got a bit of a better kind of handoff from Wall Street, and this is happening after some time, and that's why we're calling it a relief, right? Otherwise, you wake up to yields which are higher, dollar which is rallying, and markets in the US which are down. So this morning it's a little different. You've got the Nasdaq, which actually ended about 1 1/3% up. The S&P was up about 0.8%. The big problem has been the 10-year, the US 10-year. That came off 6 basis points to about 4.73. But this is not just the 10-year. Across the curve, starting from the 2, the 5, the 10, the 30, everything came off between 6 and 8, 9 basis points. We'll put this data out again. But yesterday, in the last 60 minutes, we put out data going back, 20 years, looking at very sharp spikes in the Treasury yield, and then what happened subsequently. And we are basically at that level. I'm not saying that, with the 6 basis points, you will see another straight 50 basis points fall in yields. I mean, it'll be desirable if that were to happen. It may be a little zigzag, but you'd reached very, very sort of high levels in a very short time span. That was the point. We'll put that data out a little later again. Dollar index also pulled back a little bit, 0.25%. We are now under 107, 106.77 is where the dollar index is at. You had the private payrolls number which came through, the ADP number, and that disappointed. So data was soft. Data soft means that policy does not need to be hot. So 89,000 jobs added as compared to expectations of 150,000 plus. Now, the big data point is the monthly jobs data, which we'll only get right before markets open on Friday. Now, the ADP is not a great indicator of what the jobs data will show, but it's kind of raised expectations that the monthly jobs data on Friday will be soft as well, softish. I think we'll live with that, and not hot at least. So we'll see. At least that's the expectation based off this that we got last night. Oil prices, big sell-off. I mean, the worst in over a year in terms of that asset class. 5% plus sell-off. Fundamentally, I don't think very much has changed, and we'll have Manisha talk about this more. It's largely to do with positioning, etc. So 5% gone. From basically, from $96, $97, you're now looking at $86 in a very short time span. So, but that's good news, great news actually for a big oil importer like India. Now, just circling all of this back and tying it into levels, near-term support. Basically, the framework is that both the Nifty and the Bank Nifty have come down to August lows, right? We were talking about that retracement. I mean, 38, 50, 68, 78, all those retracement gone, and you're basically back at the starting point from where the August rally began, August 31st to September 15th. That was the big move, and almost all of it has been retraced on both the Nifty and the Bank Nifty. So for the Nifty, we got to at yesterday's low within 100 points of that low. So that becomes the support, which is the August low, which is 19,223. It's about 200 points away from where we are because we got a bit of a bounce as well. But that's the big number rather than looking at retracements, etc. On the way up, watch out for the swing high that we saw earlier this week, at 19,726. Above that, a close above that, there is also, by the way, a retracement which coincides with this 19,726 level. I think above that, you'll start to see some confidence beginning to come back. Again, it's a little further away from where we are, but you need to traverse that distance. Same kind of setup and same kind of thinking for the Nifty Bank as well. Support comes in. By the way, the Bank Nifty at yesterday's low came within 20 points of August lows. So, the support comes in, which is the August-September low. I mean, in the case of the Bank Nifty, the low happened on the 1st of September, not 31st of August. So that is 43,830. That's the first level. And then you got to go all the way back to the lows that we made in June, which was 43,345. That's the broad setup that we're working with. Hopefully, the August low which was only 20 points away, will hold, and we don't need to look at lower levels. The high on the Nifty Bank, which we need to cross, is 44,755, and that should act as a bit of a resistance. The GIFT Nifty will come up on your screens, and I would say, although the backdrop and the setup, etc., is positive, and it's possible that you get a bit of a bounce which expands during the course of the day. Watch the first, I think, half hour, 40 minutes. You're in a much better place if the market opens flattish or slightly lower to take those long positions, and then watch what happens very closely because, the big driver for global markets has been US yields, and that will depend on data. And we got lots of data lined up today, and of course, the big one, which is the jobs number on Friday. You want all of those to align, and then maybe we can say that this sell-off that we've seen, which has taken us all the way back to August lows, perhaps we are putting that behind us. Sonia.
Absolutely. I mean, for now, the big headline really that we're focusing on this morning is the sharp fall that we've seen in crude prices, right? And that is a big tailwind for our market. It's a positive for our market. So I think the street is going to look at it that way. Brent crude has fallen to $86 a barrel. That's because weak demand is what we've seen as far as the US data is concerned. We'll come to the kind of impact this would have on individual stocks, but that is the big positive that our market is going to latch on to. Yesterday, the Nifty was at a 1-month closing low. And if you look at the US markets as well, not too bad. The Dow actually ended its 3-day losing streak. It was up about 120 points or so. The overarching theme is the resilience that the Nifty has showed in the last many days. So give and take everything, the Nifty has hung on to that 19,400, 19,450 level. There was good buying by domestic institutions yesterday as well. DIs bought over 1,700 crores, while FIs sold about 4,400 crores. So the selling pressure from FIs continues. But, if you're looking at individual stocks, then all of these crude sensitives will definitely be on your radar. Asian Paints is top of mind for me, because the sharp slide in crude prices is a positive for Asian Paints. 55% of the company's costs comes from crude. So I'm expecting a bit of a rebound in some of these crude-sensitive stocks, whether it's paint companies, whether it's aviation companies, tire stocks as well, may be in focus on the upside. But apart from that, the market will, sort of take heart from the fact that there are some positives to latch on to today. But let's see how the day progresses.
Well, Sonia, the texture of the market is going to get tested today because you wanted some overnight positive cues, and you've got plenty of them. Whether it's the equity market, whether it's the bond market, or even the crude market. So the texture of the market will be tested today because today you have all the reasons to see a bit of a bounce. And if you don't get it, then in fact, you know that we're going to be drifting down lower to around that 19,000, 19,200 odd mark. The big question is, will the shots get squeezed out today? The global cues are positive. All the global cues that are coming in there, they're fairly good. The FI selling has picked up, but I'll tell you what, it's being absorbed. We've not seen a large correction on the Nifty. So that's one positive. And the bigger positive is they're net short on the index. That could be the much needed fillip that we're looking forward to. The Nifty Bank, though, that's the sore point in there. And that's not participated. And yesterday you had signs that HDFC Bank wanted to participate. And in fact, in a market that was actually under pressure, HDFC banks showed signs of coming back to life. We're looking at it on the fundamental as well as technical basis. That bank is going to be the important one that will drive the Nifty as well as the Nifty Bank from here on. On the Nifty itself, there was not too much open interest built up. But on the Nifty Bank, there was clear shorting out there. And the FIs, they continue with their shorting ways. Close on 14,000 short contracts is what they added. 2 shorts for every 1 long position. The heartening aspect, though, is they added some longs after closure on 7 sessions. You know, you have, in terms of gross long addition, after 7 sessions, you had some long addition, though they continue to remain net short, with the positioning at around 75% or thereabouts. And just take a look at the chart. The last few days from 20,000 short contracts, you've gone to 92,000 short contracts. I recall in April, we went to around 100,000 short contracts, and from there we saw a big bounce. So them shorting is actually not such bad news, because the global cues, if they turn around, then you're going to get that bounce. Options data, 19,400 put was fairly active yesterday. The premium ended at around 33 rupees, but at the high, it was more than 80 rupees. The sense you got was there was some writing being seen at that level. So moving to the levels then, the Nifty yesterday's low, 19,330 becomes important. Also, there was writing at 19,400 put, so that's an important mark. On the upside, since we saw some bit of action at the 19,450 call, the premium was roughly around 60 rupees at the start of trade. So 19,510 becomes the first resistance zone, and then you're looking at the 50 DMA, which is at around 19,600. So we're starting off mildly in the green. You know, the hope is that maybe we start more or less flattish or maybe mildly in the red as well. And then you look to buy the dip. The texture of the market will get tested today. Your factors are in place to see the shots getting squeezed out on expiry day.
Okay, let's see. For now, the GIFT Nifty is, indicating a start in the green, but there are plenty of voices that we're getting this morning. So let's go straight to them. Mahesh Nandurkar of Jefferies says that their meeting with 35 funds in Europe last week suggests that investor positioning on India is just a small overweight. He says the US dollar strength and high US yields drive continued emerging market outflows. He adds that investors are taking time to absorb the new reality of investment-driven GDP growth. He says the multi-year capex cycle will mean that new stock leaders will arise. Mahesh believes that long-term investors should buy property, banks and industrials in this near-term correction.
Okay, well, this is Vikash Kumar Jain of CLSA who says that globally India remains the best two-year earnings growth story. He says after a roller coaster quarter, investor sentiment ended in the neutral zone as per their India Bull Bear Index. Moreover, he adds, India's equity valuations versus bonds have remained unchanged and the metric is still shy of the warning reversal level. He says add HDFC Bank to the portfolio. And further, they've raised their overweight for banks as a sector. They also like energy but remain underweight on IT and the consumption theme.
Okay, well, the rupee, let's get you some views on that. The rupee closed at 83.24 yesterday. So here are some money market views for the day. Parul Mittal Sinha of Standard Chartered Bank says the dollar INR inched up marginally this week, driven by dollar strength and continued FPI outflows. She says probable RBI intervention, however, helped to smoothen the volatility. She expects the dollar INR to trade in a range of 83.10 to 83.35 in the coming week, amidst continued dollar strength and elevated oil prices.
Well, on bonds, Parul says that India rates continue to trade in a narrow range despite sharp rise in US Treasury yields. She says expectations of Indian government bonds being added to more global bond indices and moderating domestic inflation continues to support India rates. She adds markets are likely to stay range-bound ahead of the October MPC, where a hawkish pause is widely expected along with retention of stance and withdrawal of accommodation. She expects the 10-year benchmark bond yield to trade in a range of between 7.15 to 7.3%.
Well, we have a lot of stock-specific action to track for you. We get to that in just a bit in our special Top 10 segment. But for the time being, we run you through the list. And there are plenty of banks in there. RBL Bank, PNB, Bandhan Bank. You also have Hero Moto, IEX, and Healthcare Global. They are all stocks on the back of positive news flow. While on the flip side, Marico, Navin Fluorine, ONGC, and NHPC will be reacting to negative news flow.
Okay, well, that's basically some opinion coming in across asset classes.